More than 113 million people will enter the global consumer class in 2024. The global consumer class consisted of 4 billion people in June of 2023 and is expected to reach 5 billion by 2031. 33 million will come from India, 31 million from China, 5 million from Indonesia, 5 million from Bangladesh, Vietnam, Pakistan, Philippines, Turkey, Thailand, Egypt, Nigeria, Brazil, and Mexico, some of the other countries. Now take a look at this graph on your screen. Do you notice something? Yes, the US is not there. The country with the supposed strongest middle class doesn't even have 1 million in global middle class. What on earth is happening? The best way to investigate this is by checking other data that could provide a proper context. Let's look at the depletion of the American middle class in the last several decades. The middle class, once the economic status of a clear majority of American adults, has steadily shrunk in the past 5 decades. The share of adults who live in middle-class households fell from 61% in 1971 to 50% in 2021, according to a new Pew Research Center analysis of government data. This is a little surprising considering with government assistance and less spending during lockdown, America's middle class was able to save unprecedented amounts of money during the pandemic. U.S. households have squirreled away about $2.5 trillion in extra savings from March of 2020 to January of 2022. Bloomberg and the U.S. University of California, Berkeley, in fact, revealed that wealth for the middle class families reached a record high of $393,300 in March of 2022. By the end of 2022, the average real wealth of U.S. middle-class families fell more than $33,000. Since the Federal Reserve started raising interest rates last year to curb the highest inflation in a generation, the middle class has lost more than $2 trillion in wealth. Household incomes have risen considerably since the 1970s, but middle-class households have not climbed nearly as much as upper-class and upper-income households. The share of aggregate U.S. household income held by the middle class has fallen steadily since 1970 by more than 10%, while the upper class income has gone up 20%. According to a 2023 State of the Union numbers, the top 20% of the Americans have 8 times the wealth of the middle class and more than 12 times the wealth of the bottom 20%. What's more interesting is that the top 1% has as much wealth in stocks and mutual funds as the rest of the top 20%, and the top 20% has more than 10 times as much wealth in stocks, mutual funds as the next 20%, and more than 15 times more than the bottom 20%. Private businesses are less than 10% of American wealth. Now consider the unemployment rate. We supposedly have one of the lowest unemployment rates in recent history at 3.9% for October. The economy is doing great, they say. It's raining jobs. Yet we're all getting poor, at least relative to other countries. The fundamental problem may be in how regulations have pushed Americans to build their wealth through stocks and mutual funds and have discouraged businesses. Finance and banking have been the center of our economy instead of creating products. Investing money in the market is way less painful than actually running a business. Believe me, I know. We have subjected small businesses to so many regulations that make it hard for them to run. We don't provide enough financial support, regulatory assistance, and tax breaks in the early years. We put hurdles upon hurdles in the way from the get-go, making small business owners wonder why they should bother if they can put their money in the market and have fewer headaches. And we have shipped manufacturing to the east. We prefer sitting down behind a desk and sending our money out to attract more of the same and bring it back home. That's why we thrive in the market. We like making money work for us instead of making money by creating products. The problem with being stock rich is that you're dependent on the value of your currency. China, India, and most of Asia are rolling up their sleeves and doing the work we don't want to do anymore. The advantage for them and the disadvantage for us is that they nurture their skill to create, produce, and to work. The value of their economy is reliant on products and services they supply the world. America, on the other hand, is dependent on the value of the US dollar. I know that people will say the US dollar is strong, but that's an artificial value. It's been strong because the Federal Reserve is pushing interest rates high. With a higher interest rate, you have higher returns, so investors gravitate towards the US dollar. The problem is that those who already have money invest in more money than it's benefiting them. That's why the gap between the 20% and the rest of America is getting wider. Unless the government nurtures entrepreneurship, the gap between the upper class and the rest will widen. I'd love to know your thoughts. Why do you think the middle class in America is weakening? And what do you think will stop this? Leave some comments in the section below. And if you like this video, please give it a thumbs up and subscribe for more. Thanks so much.